Hey, what's up traders? Welcome to Daily Forex Analysis for 5th of March 2020. Today we're going to be analyzing four currency pairs and we're going to start off with US dollar against Japanese yen, euro against Australian dollar, Aussie against US dollar, and we're going to finish with euro against US dollar. If you're new to this channel, consider subscribing. I'm making daily as well as weekly market analysis. And we are starting off with the US dollar against Japanese yen. This is a daily chart, and this currency is still looking very strong towards a downside. I know that a lot of you would argue that okay, it has its move, and now it's sitting on a strong support, and then it will be reversing back up. However, you have to work what's in front of you, and for now, market is not really telling me that it wants to go up. Yes, it put this a daily bullish candle, but now it's pretty much losing everything. Obviously, the day is not finished yet, but for now, it does not looking that it has a strength that it wants to go up. And it's also Thursday today, and then we have this key news out tomorrow, non-farm payroll, so it might just don't do much of the moves today and then wait for these non-farm payrolls. So if you go to the shorter time frames, I'm still looking for this one to go down. Of course, it can change, especially tomorrow. It might change the course. It might just start going up, but you have to work what's in front of you. We believe the analysis is right until it's proven otherwise, and for now the analysis shows that it is towards to the bearish side. As I mentioned on my previous daily analysis, that was 2 days ago, I said that I was going to take a trade up to these highs, which I did. Going in here with a 15 pip stop, and then it moved nicely towards my direction. My target was at 1680, but the market went down to 1683, so it got within 3 pips to my target, and then it just went up, and it went about 70 pips up, and now it's going down again. So I'm gonna be holding this position for further downside, and the target is at 106.25. We go to the monthly chart, this is gonna be down here. 106.25. We got these monthly lows down here, and also we have this monthly, I think it was 100 moving average, which is rising and is coming around the same level as these monthly two lows. And if you've been to this trade with me, then it's good for you. You might even taken off the some profits. But for now, because my take profit wasn't triggered and it came very close, and now it's retraced, and I think it will have pushed down a bit more to the this monthly 106, was it 106.25 zone. I will be waiting to hold the position. Of course, it might not work out because we have also a non-farm payrolls tomorrow, as I mentioned earlier, and that can change the course of the direction. So might want to either close it or wait for the until the non-farm payrolls is out. So that's up to you to decide, but I will be definitely holding the position and see what's gonna happen. My pip ranges as of my stop loss for now is around 70 pips. I already moved my stops to the break even. I had a 15 pip stop, but I moved my stop to the break even, just a tiny bit profit, so it's about 70 pips away, still a decent range. So it will not, if the on the non-farm payrolls the price goes against me, then it will not, I wouldn't suffer the slippage. So let's go to the 1 hourly charts and say what I'm looking at these right now, waiting for the price to come down a bit more, roughly around these lows, and then to retracement to further up about these highs, where that daily pivot is basically. So for about these highs, and then I'll be looking to short it towards downside. And the next currency is euro against Australian dollar. This is a daily chart, and my view on this currency has changed to sell. towards the short side as of the short-term view, but the long-term view is still towards upside. So if you go to the shorter time frames, say an hour, yesterday I mentioned that I was expecting this currency to go up. However, it did this move and then started going down, and it's pretty much took out all this low, and even went further, and now it's kind of chopping around a bit. So I'm expecting this to go down. If the currency goes higher, just a bit higher, to enough to take out these highs, this spike high up here and up here, just basically just above this daily pivots. So if there is some orders there to suck it in, and any stop losses to trigger it, and then I would be looking to short it towards downside. But for as of the first target, will be around this monthly pivots, about 16700 as of the first, but I would not be looking to go further than this low at 6650. That will be a second target. Then if the price starts breaking down and go further, then I will be switching my long-term view to the short side. But for now, as of the long-term view, is still long side, and for the short-term view, it's to the short side, for up to the extent of, as of first target 16700 and the second target to 16650 zone. And now it's Aussie against US dollar. This currency has this nice retracement. It tested this monthly support down here, and then since the last couple of days it's been retracing, it's going up. The longer term view is still on the short side, but as of the short term view, as of the day trades, is towards a long side. So if you go to the shorter time frames, I am looking to get onto the long side. The first entry would be around down here, about 6610 zone. Let me bring up a pen. So around down here for 6610, relatively tight stop would be looking about 15 pips max, and we're gonna be running these around at 6665, around that zone where you got these lows down here, also these spikes, oops also this spike here, and you're gonna come, this one's gonna come across around the same area where that daily trend line is. So you would be looking about 40 pips, so you don't want to take have a big stop loss that it works out well with the risk reward. So at least target the 1 to 2 risk rewards, ideally 1 to 3 or even more, but in this case I don't think you can manage to get out more than 1 to 3. So if you have a tight stop on let's discuss this. So if you get on at 6610, have a stop around about 12 pips might do as well, maybe 15 pips, then you would be looking about 1 to 2.5 roughly, which is still good. And lastly, we got euro against US dollar. This is a bit tricky one because it has this nice move upside and then hit that resistance up here, and now it retraced since then. It's putting these pretty ugly candles. If we have a closer look, it put these inverted hammer up here, and then yesterday, not inverted hammer, it was spinning top, and then yesterday put this kind of ugly hammer on this one, which I don't really like it, and it's been chopping around today. If we go to a shorter time frame, yeah, it did not give much. You see that 4-hourly dojis there, it's not really much for me, but if you're a short-term trader, there is an opportunity for you. If you go to the shorter time frame, 15-minute charts, if that currency retraces up around where that 4-hourly pivot is right now, which is at 111.30, 37 area with a very tight stop. You can go to the short side and ride it to these, where these lows are at 111.10. So 111.37, let's say you get it at 111.35 and ride it to the 111.10. That's 25 pip stop. So if you have a tight stop on this occasion, you probably can get away with like 8 or even 6 pips on that one. Still gives you a good risk reward on that. Even with the 10 pip stops, it's 2.5 risk reward, which is decent. Okay guys, this was daily Forex analysis for 5th of March 2020. If you find this video helpful, please give it a like, share it with your friends, and also don't forget to subscribe. I'm making daily as well as weekly market analysis, and there's gonna be a lot more content to follow in the future. If you have any questions, leave it in the comments below, or you can also reach me by my social media, which the link's gonna be on the comments below. And until then, I will see you guys in the next video.